Welcome to the daily update, where I'll go over the action in the market for Thursday, July 17th, and we'll see how things look for Friday, July 18th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Okay, set another new all-time high. We also set one with the NASDAQ and NASDAQ 100. We're still positive on all time frames, but we're seeing some internal weakness that's giving us some concern and not a lot of really shifting over to positive yet. We did see volume above average, and we haven't seen that in a while. The retail sales number came in friendly to the market, and the at least weekly jobless claims are showing that the employment situation is holding up pretty well. So yeah, I mean, it's like we're not falling off a cliff yet. We're in fact showing a pretty solid economy right now. That's pretty much, the market's already figured this out, but it's looking like there's not going to be a rate cut at the end of July. The Fed doesn't really need to do that. They are concerned about inflation, the growth that they're concerned about in the economy. That seems to be doing okay, and they were worried about things slowing down. But at the same time, the tariffs seem to be working and actually adding money to the government. But not all the tariffs have really kicked into gear, and we're going to need some longer term views of how things are actually unfolding to see how the economy is really doing at some point. But we're still at that point seasonally, about halfway through July, where the last couple of years we've seen a pretty significant decline from these levels. It hasn't really started yet, and it may not even happen. We just want to be aware of that in case it does. Okay, so right at the open, we had a higher open. Not much of a gap, but still a higher open. But then after that, we saw some buying coming into the market. We climbed above 62.75. We even got above 62.87, which was R1. We never made it up to R2, but we still kept going up. We got above 6,300. So we were here earlier in the week, and that's where we set the high and then came down from that. Now we're back up to this level again. Now we did close a little bit below 6,300, so we haven't officially gone above that yet. We were up 0.54%. Volume was slightly above average. So we're seeing a little bit more conviction in Thursday's session. And we are positive on all time frames when measured by moving averages. And inflation, well, we had CPI hotter than expected, but PPI was weaker than expected. Retail sales seem to be coming in pretty good there. And so the economy is looking pretty good for the time being, but that can change. So that's why we watch these things as they come out. We want to be aware of potential geopolitical things that are going on. Israel, Iran, Russia, Ukraine, not having a real impact on the market right now, but at the same time, that could change at any time as well. And then any more tariff or trade war news that comes out. Some comments. The S&P, NASDAQ, and NASDAQ 100 closed at new all-time highs. Now, the NASDAQ and NASDAQ 100, we've seen this happen throughout the week. This is the first new all-time high for the S&P in about a week. Small caps and mid caps had a good day as well. Still a lot of damage to repair, and we seem to have a good day or two, especially with the small caps, and then things retreat after that. But at least in Thursday's session, they had a pretty good day. And some Federal Open Mouth Committee people came out. We had New York Fed President Williams and Kugler, they're both voters on the FOMC, indicated that the current policy rate is appropriate for the conditions that they see in front of them, which includes the possibility of tariff-driven inflation in coming months. Because, again, these things haven't really kicked into gear, but this is not the chairperson of the Fed, so we make note of when other folks say things, but it's really, if it comes from Jerome Powell, that's when it's the most important. And then this is interesting. Haven't seen this in a long time. The parabolic SAR, which is what I use as a primary indicator, it turned negative after Wednesday. Well, with the update on Thursday, it switched back to positive. Usually, once this thing clicks one way or the other, it tends to last a few days. It's kind of strange to see it only lasting for one day. And seeing some better short-term positive momentum. We had the Williams percent R. The CCI 14 is now back on the list where it had been off. The stochastics, the slope oscillator, still extreme positive, but still negative since it's below its moving average. Now we're back far away from the 20-period moving average again, as measured by the boom indicator, and then the short-term RSI is starting to get extreme positive. Intermediate term, the TTM squeeze continues to be negative. It's going down, but it's still in that extreme positive territory. We're back up into the +3 channel with standard deviation. The rate of change, it's coming down, but it's still extreme, going back 50 periods. And then the momentum oscillators really kind of shifting over and looking more negative now, but a lot of them are still giving extreme positive readings. The Sean trend meter did improve. It's back on the list again, and we continue to be far away from the 50 period moving average. And then no overall change with the Fed scenario. They think we're going to have a soft landing, which means no recession. They're not cutting rates right now, and it looks like that's what's going to happen in July is no rate cuts. And they're worried about inflation creeping up. So currently they are in wait and see mode. The dollar was up, interest rates were up. Now, the number here is the same, but these go out a number of decimals, where after Wednesday, we were kind of lower to 4.46%. And then after Thursday, we're a little bit higher to 4.6% when you round up and look at the further decimals there. And we're still extreme positive with sentiment. You've got a market that folks are really confident in right now. When you look at our fear and greed index, we dipped down a little bit. We were at 74. Now we're right back up to 75, which is extreme positive. And we're positive with our trend. And we're still above the moving average. We're above 20. The green line is above the red line, so we're positive there. And with the update, we're positive. And I'm still keeping it positive to mixed because of some little bits of internal weakness that did improve on Thursday, but is still giving us some concern there. So this was probably the longest list of the week for economic reports. So we got a whole lot of stuff to go through here. The big number here was retail sales, up 0.6%. Last time it was down 0.9%. They thought it was going to come in up 0.2%. So this exceeded expectations there. But when you take out autos, we were up 0.5%, and that was still higher than the 0.3% that they had expected, or last time it was down. And we had seen retail sales going down for the last couple of months. And so it was seen as positive for this to come in with a positive report. And then initial jobless claims still hanging in there. 221,000. We're back down into the range for initial claims that we were in for months after months. And then we started to go up, and now we're coming back down into that range. Continuing claims still under 2 million there. This is still a little more elevated, but they really didn't change all that much. 1.956 million. And regionally, the Philadelphia Fed index came in at 15.9. That was strong compared to the zero point 0.2 decline they thought was going to happen. And last time it was down -4. Import prices up 0.1%. Last time they were up 0.4%. So those prices came down. Export prices also lower than what we saw last time, up 0.5%. Last time they were up 0.6%. The NAHB Housing Market Index came in at 33. They expected 32. Last time it was at 32, so not a real big change there. Business inventories were unchanged, where they expected them to be down 0.1%. Last time they were unchanged. So here's some charts. This is switching over. I have this a little bit out of order here. The change in liquidity. Liquidity, when there's more liquidity in the market, a lot of that ends up going into stocks and really helping things. And so we're seeing things really going up as the S&P has been going up. Then markets priced in the first rate cut with 60% probability and 2 cuts by year end. Okay, we can say whatever we want 6 months from now. And the market does do that. But according to this, yes, even the Fed is still coming out and saying there's probably going to be two rate cuts by the end of the year, but it's not going to be in July. The first one would end up looking at September. So here, these red diamonds here, this is Deutsche Bank. And this is what they're predicting. And then the Fed dots, this is what they're predicting, which again, you see it going lower and then lower again here. And then this is the Fed fund futures. They're also predicting that interest rates are going to go down. So there's still the likelihood of rate cuts. It's just not looking like it will happen in July. So then we'll start to focus more on the September meeting. Okay, mega cap growth and tech positioning are improving here. This is the latest high frequency measure. These are folks that are more active in the market. And then we are seeing an improvement. We've still got a lot of people that don't really trust that the market is coming up out of those April lows, but it has been, and now we're setting new all-time highs. It's been quite a recovery here, but that's continuing to improve with this. And then the return on equity, when we compare the US at 21% with the rest of the world at 12%. So we're still seeing higher returns from the US market. Foreign revenues by region, and of course, the US is the biggest part of this. And then a breakdown of the other countries that are listed here. Gold has more, it's been up more than 25% this year. And as I go through in the intermarket analysis video each weekend, it's still the best performing asset in 2025. Even when it goes sideways, even when it declines, it's still quite in first place. And financials positioning also improving here. This is the high frequency measure, which is the gold diamond, and we are coming back up. That's showing an improvement there. Then I've got this reversed here. So weekly jobless claims, they are coming down and the moving average is going down. And that's taken as positive that the employment situation is holding up according to this. We're still getting a pretty high reading with continuing claims, but as I said earlier, we're still under that 2 million mark. We're still going up with the moving average. This is a bit of a concern, but if we continue to see lower weekly claims, then this number may likely start to decline as well. And this is everything together. The red line, these are the initial claims going down, holding steady for right now with the continuing claims, and then also the latest unemployment rate at 4.1%. Then we look over at retail sales. Actually, on a year-over-year basis, the core, that's when you take out autos, that is declining a little bit, but still above zero. And month over month, we saw a nice little bump after seeing two downward measurements here on a month over month basis. So that just shows that retail, which is such a huge part of the U.S. economy, is at least showing some strength here. Philadelphia Fed Manufacturing Index, after spending the last 3 months being negative, it's actually turned positive, so that's better regionally. And then the NAHB Housing Market Index starting to go back up just a little bit here after mostly it's been declining lately. And business inventories, not seeing a lot of things still sitting on the shelves. So things are getting made and they're going out the door. It's kind of a general way of looking at that. And we've seen a decline in the overall inventories going back to the beginning of the year. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. All right, here's the intraday chart. So didn't see much of a gap, even though the data was taken as positive. The strength in Thursday's session really came after the market opened, and we immediately went up. We got above the 62.75 level, tried to come back a little bit, retraced, set up a bit of a base here before climbing above R1. Got above that, came back down to R1, which now is acting as support, and then saw some strength going into the end of the session. A little bit of a drop down here at the close that took us back below 6,300. And not much of a change. We're up a little bit in the initial overnight session right now. You can see here, we were actually looking a little more weak with the futures before the market opened, and then the strength came back in after the economic reports were released. Still looking good here. The blue line's above the red line, and they're both going up. That means growth is outperforming value intraday. And we came down near the latter part of the day here, but overall, the S&P growth to value intraday chart is still looking positive in the bigger picture. It continues to go up. End of day, growth was up more than value. It was also up more for the mid caps as well as the small caps. So that's helping some of these end of day ratios with the small caps improve. So coming back and looking better there. Also going back up with mid cap growth to value, and we're setting another new high here with S&P growth to value. This is what you see in a more positive environment. And ticked down a little bit after Wednesday. Now we just ticked up a little bit with this growth to value ratio, but still looking solid overall. And the discretionary to staples coming down a little bit here. Even though discretionary went up, staples went up a little bit more, and that caused the ratio to come down. But we're in an uptrend here with the discretionary to staples ratio. And this is also positive. This is value to tech. When this is going down, that means tech is outperforming, and that continues to decline. And here's our trend. We are a little bit concerned here. We're rolling over a bit. This more sideways move that we've been seeing, even though we had an up day and we're setting a new all-time high, we're not seeing that upward conviction that we were seeing before, and the ADX is starting to pick that up. We're pretty much down to the moving average. If we cross down below the moving average, that would suggest a weakening trend, but we're still positive with the green line above the red line. And also rolling over, but still above the moving average in the intermediate term here, but the green line's above the red line. That's positive. We did see a pickup with volume here, and we were just a little bit above average. You see a slight green bump there for the histogram for volume. And sentiment did decline because we had the up day. We're still well below 20 with the VIX on a closing basis, and the bar charts also declining for right now. We're also below the moving averages, and the moving averages are going down with the volatility of the VIX itself. And we declined with this fear gauge. We also ticked down with this other fear gauge. So we're seeing some fear coming out of the market, looking across multiple charts, which is confirming that sentiment is positive. And we did see a move up, though, with the equity put call ratio. Again, on an up day, usually we would see this going down, but we saw this going up. There could be some hedging going on here. And we're still going up with the 5-day chart, and the 10-day chart is still going up as well. So, and this is more negative. That means there's some nervousness out there because some hedging is going on. There's more puts being purchased than calls. And we did get the latest reading from individual investors, just barely coming back above the midpoint here, slightly positive after it had been coming down a little bit. So there's some pessimism out there. When you look at this sentiment gauge, it's like, okay, there's still more room to run to the upside. It's the daily chart that's coming in at 75 that changes multiple times throughout the day. That's what's giving us more of the concern. We're still going up with the risk on to risk off ratio here. That continues to go up, setting a new high with this ratio. We're also going up with the high beta versus low beta ratio. That's positive for the market. And we are going up here with the volatility risk premium. So there is some positioning of potential fear that's coming into the market. We're just not seeing it in the usual measurement that we follow, the fear and greed index. And the advanced decline lines, not setting an all-time here based on price, just barely setting an all-time high based on volume. That can be positive when volume is leading price. And we're just barely going back above the zero level with our advanced decline oscillator, which goes over the last 10 days. It had dropped actually negative. Now it's showing some improvement. And we're also going back up with the short and intermediate term advanced decline ratio. We're still declining with the 5-day and 10-day moving average of the new highs, new lows. But you can see when we broke out there and got above 6,300, that did generate a lot of new highs inside of the S&P. And we're back to looking more positive here with our smart money indicators. We're above the advancing moving average here. We're starting to cross back above the moving average with the boom indicator. And we're going up with the chicken money flow. And we're turning back positive with the chicken oscillator. We're back above the moving average. But you can see these are looking kind of lengthy right now. We're getting above this red line. If we go back here, this one isn't looking too bad. But when accumulation distribution, we might be getting far away from the moving average again. And we did improve. We were a little concerned after Wednesday when the green line was really coming down. But with the vortex, the green line's now going up, but the red line still continues to go up. Still looking good with our advanced decline line studies. We're above advancing moving averages. And after slightly dropping negative with those stocks above their 20-day moving average in the S&P, we dropped down to 49. Now we saw a nice little bounce there. And we did improve with the 50, 100, and 200 period moving average studies as well. And so we are setting a new all-time high here. You know, and then the red dashed line, that's the previous all-time high. And we were just slightly above the moving average with volume. And we did improve with the 20, 50, and 200 period moving averages on the S&P itself. We're no longer extreme with the Stochk RSI. We're still below the midpoint, but this is improving. We're back to looking more solid here with the Williams percent R showing stronger short-term momentum. And the CCI 14 is now crossing above the extreme level there. We're going up, but we're not at the extreme reading with the CCI 20. And we're looking better here with the short-term stochastic, but it's getting a very high rating. It doesn't have a lot more room to run to keep going up. We are turning up, but still below the moving average with the intermediate short term, and we're trying to come back above the moving average with the long short term, but we're still above this extreme positive level here. Did improve, but still below, excuse me, still below the midpoint with the force index. And back to looking okay. We're rolling over a little bit here with the short-term trend based on 20 periods. We spent a number of days down below these lines, but they continue to go up. Now we're getting back up to these lines again. So if we can stay above these lines, that would continue to show that the short-term trend is still looking stronger. Back up into the +3 channel with the standard deviations chart. Balance of power, still looking positive there. Still above the 10 period simple moving average. Here, that's the green fluorescent one, and all the lines continue to go up. And this redraws here, the go, no-go system. It's kind of comes back and thinks about things as, oh, wait a minute, I'm going to be a little more neutral now. So it's not a full-on positive at this point. It's more neutral. We are coming up to the highest end here with the highest high value. That's still positive. And again, this is more for a time factor. When we look at the Landry Light, when we go above this 40 level, we started that at the beginning of July. That just means that this has gone on for a long time, and maybe we're due for some kind of a change. But it's still positive, because every day that goes on here, we're drawing in a new green bar. It's looking more how long this has been happening. We're still positive with the proper order, but we're looking negative. We're actually dropping down, but we're still above 150 with the TTM squeeze. We have the darker shade of blue right now. And coming back down, but still extreme positive with the rate of change going back 50 periods. Still trailing along, barely above zero here with the ease of movement. Turning back up, still looking positive with the Arun. That means there's more buyers than sellers. And still slightly negative with the McClellan oscillator for the S&P. It is improving, but it's still below zero. So we're continuing to go down with the summation index based on price and volume as well. And we did improve with the NYSE McClellan oscillator, but still below zero. So we're still declining with the summation index based on price and volume. And even with the up day, the swell trading oscillator continues to decline, both based on price and volume. Rolling over, starting to drop below the moving average with the PMO, but since we're above this red line, that's why it's on the extreme positive list. We're actually still negative and dropping below the moving average based on price and volume here. And a bit of an improvement, but still below 50 with the PMOs that are rising. But the buy signals continue to decline, and we're flattening and trying to turn up here with the PMOs that are above zero. We've gone from a number of days of being neutral with the S&P now back to positive, setting that new all-time high. And here's the 1 day of the parabolic SAR, which turned negative. Now it has switched back to positive. And below the moving average with the slope oscillator, but still above this green line. That's what's making it extreme positive. We're actually looking more negative now with the MACD. Didn't see much of an improvement there. So rolling over here with the short and intermediate term oscillators, rolling over a little bit, but extreme positive with the tricks, and just kind of flatlining, slightly positive here with the KST, another longer term oscillator. We're still negative with the Copic curve. We did improve with the Shine Trend Meter, getting up into the darker green area again. Still above 50 with the money flow and the ultimate oscillator. Still above the moving average and setting a new all-time high here with on balance volume. And we're not extreme with the intermediate term RSI, but now we're going back above the 70 level with the short term RSI. Intermediate term trend, both the lines are still going up. We've been hanging out above the blue line. We're still below the red line, but they're still advancing. So that's still looking pretty solid there. Still above all of the moving averages that we have, and all the moving averages continue to advance. We're now far away again from the 20 period moving average, and we remain far away from the 50 period moving average. But the bullish percent index setting an all-time high and seeing this go down, not a real vote of confidence there. That's some internal weakness that we're seeing. So this is still negative, and we are declining with the NYSE bullish percent index. We ticked up a little bit with the NASDAQ 100 bullish percent index. Still generating a praying bottom fisher here. I'm not sure what bottom it found, but it's still generating a signal there. And then we have one more day in the trading week. We'll see if we're able to finish it out positive. That would really help this longer term pattern that we're seeing of higher highs and higher lows. And looking better now with the Heikin Ashi. We've been going sideways with a lot of candles that aren't all that wide. It turned a little bit negative after Wednesday. Now it's looking a little more positive after Thursday. And we're back to pointing up with the Kegi chart. That's positive. And we're still positive with the Renko chart and the three-line break chart. Long term, showing some improvement with the 150 and 200 period moving average study there. Still on a full-on sell signal here with the Zohorchak. We're all the way down at a -10. Still positive on all time frames here. When we look at the different stock indexes, bonds are still negative across the board. And we're still looking at a short-term uptrend for the dollar, but the intermediate and long-term trend remain negative. And real estate and healthcare, two of the more defensive areas. They were the only sectors that were down. It was kind of encouraging to see financials do better, even though our ratio isn't improving all that much between the financial sector and the S&P. But staples were strong. Then you had tech that was up. That's good. Communication, another growth area, and discretionary. So even though the growth areas were up, they did lag in Thursday's session. So we had Canada back to setting another new all-time high, as did the NASDAQ. And then not on here is the NASDAQ 100. The S&P setting an all-time high and going above 6,300. This is positive here with the tech sector having a BPI cross back above 70. Then utilities showing a little bit more strength with a BPI cross back above 50. And more green over here in the growth areas, and that's what's helping the indexes to actually continue to go up. A lot of red in healthcare, and that's why we saw that as one of the weaker areas. And we were up a little over 0.5% with the Dow. Not a really good looking pattern here where we've been going sideways with the S&P. We're actually seeing a series of lower highs and lower lows for the most part. We'll see if we're able to break that. But we did generate a recent golden cross. We've gone from neutral back over to positive with the diamonds, looking at the Elder's Impulse system, and we're coming right up to this R1 pivot point here. And these tend to be important for the NASDAQ. That's about where we topped out in Thursday's session. We've gone from neutral to positive with the NASDAQ. Also not quite up to this R1 pivot point with the NASDAQ 100, and it was up 0.74%. Going from neutral to positive with the Qs, looking at the Elder's Impulse system. Still negative, though, with the momentum. That's not picking up any strength. Price is going up. The PPO is continuing to go down. That's a negative divergence. A little bit of a concern there. And we're also still dealing with this long-term trend line on the NASDAQ 100 weekly chart. We are starting to get a little bit above that, and we did that before. So we're just wondering if this is producing some overhead resistance and really slowing things down. So we're back above the 200-day moving average with the S&P 600 small caps. We still remain above the 200-day moving average with the Russell 2000 small caps. And we've gone from neutral back over to positive with the small caps. Mid caps getting a little bit above this R1 pivot point here, above both moving averages. So some improvement, up over 1%. And going from negative back over to positive with the Elder's Impulse system for the mid caps. Financial sector up almost 1%. That's really showing an improvement, but we're still below the 200-day moving average with the ratio between the financial sector and the S&P. That's a little bit of a concern. We'd like to see this show more strength. And we're seeing a golden cross here with the bank ETF. We spent a number of days above both moving averages. We were starting to drift lower, but it was up 1.83% on Thursday, and that's also helping to generate a new uptrend here. The Wilshire also setting a new all-time high and in an uptrend, setting another new all-time high with the total U.S. stock ETF and in an uptrend there. FANG index not at an all-time high on a closing basis, kind of slowing down a little bit. These are the really big stocks, but they're still in an uptrend. So Apple was actually down slightly. We had Amazon up 0.31% and in an uptrend. Above both the moving averages with Google, it was up 1/3%. Not real big moves here. Microsoft setting another new all-time high, and it's been one of the better performing stocks now over the last few months. Meta was down 0.21%, still above both moving averages and still in an uptrend. Nvidia was up 0.95%. It likely looks like a new all-time high there. And still dealing with its moving averages with Tesla, it was down 0.7%. Netflix, not back to an all-time high yet, but it did go up 1.91%, still above its 50-day moving average, still in a longer-term uptrend. And I'm setting another new all-time high with the Dow Jones Semiconductor Index. Also a new all-time high with the SMH Semiconductor ETF. And here's the rainbow. That's the same ETF that I just showed. This is just the closing prices and showing how things continue to improve there. And retail, since we had retail sales still underperforming the S&P, and we're seeing a recent golden cross here with the retail sector itself, and we're still above 50 with the RSI. So looking at the bellwethers, semiconductors improving here after going sideways for quite a while. And home builders, it's still not looking all that good, but it was up in Thursday's session. A little bit of an improvement with the transports. It looked like when I did the videos last weekend, transports really had a good week, but since then they've been pulling back. Retail, just not really breaking out. I mean, it's not falling apart, but it's not really showing a lot of strength right now. And a bit of improvement, but still coming back up into this range with the regional banks. And seeing a bit of a turn up here with the short-term correlation between U.S. and world stocks, still drifting lower with the longer-term correlation. Getting further up into the mid-60s now with oil. That's continuing to go up. And the dollar still has not come back up to its 50-day moving average, but it has been improving. And here's the Truflation reading, and this is recalculated every day. It's coming in at 2% now, where the CPI came in at 2.7%. And still below that 4.5% level. We're just keeping an eye on this. We've been starting to go back up, but over the last few trading sessions, interest rates have settled down a bit, and that has helped stocks to go up. We're still above the 50-day moving average with the 10-year based on price. So the growth to value ratios, Q's to S&P, looking good there. Not really looking good with discretionary to S&P, but we are looking positive here when we compare large cap growth to large cap value. Still above the moving average with the large caps, mid caps, and small caps. So that is improving. Still going up with the S&P to utilities ratio. That means the S&P is outperforming utilities, and that's positive. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. So what's the outlook then for Friday? We're still positive and we're still trending. Not a change there. We're going to get housing starts and building permits, which are kind of a forward-looking type of economic report that may end up helping the real estate sector if they end up being positive. And consumer sentiment is going to come out. How are people feeling about things? And then anything geopolitical. There could be escalations between Iran and Israel, Russia, Ukraine. There could be domestic issues that occur in the U.S. So we just want to be aware of these things. And then any trade news that comes out, any tariff news that comes out. And here is completing the economic calendar for the week. And all the important reports have pretty much been released now. Seasonality is positive. Going back to 2002, July 18th, positive for the Dow, S&P, and NASDAQ, but it will be options expiration. And we tend to be up more than down, where be aware of this. The week after options expiration, we tend to be down more than up. So if we see some strength going into Friday, there's some historical precedents that may not carry over into next week. And still seeing some general flattening here of seasonality when you just look at post-election years for the S&P. That's the green dashed line. This is also showing how things tend to flatten out a little bit, and this was the performance of how things were going. Tried to update this with what was actually happening. And then the second half of July, as I keep saying over and over, it is positive, but it tends to really underperform the first half of July. And we're getting beyond this earlier part of July with the NASDAQ, where sometimes we see some pullback after that, but we're not seeing that at least yet. And this also suggests once we get through the middle part of July, we might see a little bit more weakness, according to Carson, before we see a little bit of a bounce going into the end of the month. This has also been updated. It's a cycle composite here. The dashed gold line, that's what the S&P has been doing. And we've been hanging into that fairly closely now, where this still has a little bit more room to run to the upside before we tend to go sideways. And then it's September, even August, to a point where we start to see some weakness before we end up usually having a strong finish to the year. Again, you don't want to base things around this. This is just historically what has happened. All right, so we're still negative with the S&P and NYSE McClellan oscillators and summation indexes. We're still looking more negative than positive with the oscillators here. The bullish percent index continues to decline. The Swindle trading oscillator is still negative, and the momentum for the NASDAQ 100 setting an all-time high, but its momentum indicator is negative. And then the longer-term special K chart continues to be negative, and then the longer-term Zahorchak method is on a full-on sell signal currently. But then our smart money indicators are starting to look more positive again. And the growth to value and discretionary to staples ratios continue to be positive. Parabolic SAR, which had been negative, now it's back to positive. And when you look at the NASDAQ 100 and NYSE bullish percent indexes, they're positive because they're above 50, but they are declining. If there were moving averages on those, we would actually be negative with these. And the ease of movement is positive, as is the money flow, ultimate oscillator, and vortex. And then the financial sector, we'd like to see it start to outperform the S&P. I mean, it's doing okay all by itself, but that weakness that we're seeing is a little bit of a concern there. And then we're still seeing a praying bottom fisher buy signal. All right, and then here are the pivot points for Friday's session, which have already been updated on the YouTube community tab. No change to the overall conclusion. We're positive on all time frames. We are trending. And again, I measure positive or negative by are we above or below the moving averages? And we are with the short, intermediate, and long term. Thank you. Have a really good day on Friday, and I will talk to you in the next video.